Okay, hey VC Stack community, we are here today with Alex Macdonald. Alex is a serial entrepreneur, has founded several companies, also a very active angel investor. So I think at the moment around 30 portfolio companies all around the world. And we are here with Alex today because he is creating a new company that's called Sequel. And Sequel is basically turning athletes, professional athletes, into investors. And we are taking a deep dive with Alex today on why that makes sense, also from a business perspective for Sequel, but also taking a look at the general markets and why more and more athletes, celebrities are becoming investors into startups. So maybe just real quick, Alex, give us like a 2-minute background on yourself, maybe if you want to introduce yourself, and then we jump right over to Sequel and the market right now.
Sure. Yes. Thanks for having me, Max. In terms of myself, I started my first company 9 years ago, Velocity Black, which is a digital concierge product. Raised a lot of venture capital for that, grew it internationally. There's now 150 people in that company, and it's doing very well. I stepped back to be chairman last year in order to start Sequel. And I guess my journey to Sequel was I was investing myself as an angel investor for about the past decade now, and saw, I got lucky with a few early wins and saw a growing interest from people in my network outside of the world of venture and startups and to invest, learn more about startups, about business, and help companies, and particularly from people within the world of sport, also in entertainment. And together with a few friends discussed the opportunity. Thought there was an opportunity to build something bigger than just a syndicate or a VC fund, and to create a platform for professional athletes. And that led us to starting Sequel late last year. So we're still very early, just getting going. But yeah, we've had a lot of interest so far, both from athletes, also from startups and our partner VCs. So things are going very well, and yeah, excited to be here and speak to you today.
Nice. Thank you so much. And there was also like the first really interesting thing in the things that you just said. So I read on the Sequel website that you are on a mission to help athletes build a legacy for their families. So what do you mean by that, and why does it even matter?
Yeah, very good question. There's actually a second part to that sentence, and maybe it's missing from one part of our website, which is build a legacy for their families and for the world, importantly. But just zooming out a little bit, we believe the world is changing faster than ever before. I think that's evident. Startups have already proven they can transform the world we live in. Innovation is actually increasing exponentially. Some people think it's slowing down, but all the evidence shows that it's actually increasing, and particularly now with the advent of AI, ChatGPT and all the associated products that are being born out of that new wave of innovation. And the world's biggest problems in healthcare, climate, education will be solved by startups and by innovation. And by bringing more capital and attention to those companies, we think will help accelerate us towards a better future. And athletes have a unique ability to bring both capital and the world's attention to startups and some of those problems we're trying to solve. In terms of the athletes themselves, the other side of the coin, many athletes experience, financial distress post-career. There are very high bankruptcy rates. You can Google that. Lots of research on that in both, in the US and in Europe. And a lot of that comes down to bad advice they were given, during their career and post-career, and also a lack of long-term sort of investing during their career. So we're looking to solve that for them with education and access to invest alongside the best performing investors in the world. That will help them hopefully create a legacy for their families as well, create multi-generational wealth, ensure that they're set up well post-career. It will also help them learn and understand about business. Whatever they want to do post career, we've seen a lot of interest in athletes starting their own companies or working or moving to work in the startup world. And a great way to start learning about that is obviously investing in those companies. So yeah, it's building a legacy for their families, but also, having a positive impact, investing in things which generally are transforming the world that we live in.
That's cool. Okay, so maybe let's take a step back and take at the whole like investing market, or like the investing market for athletes. So when was the first time for you that you heard about athletes investing into startups?
That's a good question. But a long time ago, I mean, in fact, my very first angel investment, which was a temp recruitment platform called Sift in the UK. I actually invested in that, and then David Hay, the boxer, also invested in that with me. And I still remember, I didn't, at the time I was thinking, why would like the general press be interested in writing about this company? And once David Hay invested, there was an absolute explosion of sort of articles about this company. Temp recruitment platforms, no disrespect to them, but it's not exactly an area of high consumer interest. But once David Hay invested, there was a huge amount of press that was written about it. It led to new partnerships for that company, new customers. They were able to attract a lot more talent to the business. And ultimately, that company was sold a few years later at a great exit for the founders and the team. And so I guess that was my first sort of personal experience of investing alongside an athlete. And I saw, the impact that an athlete investing can have on a business. And then obviously, it's been a real growing trend, particularly in the US. And I think the US is probably a few years ahead of Europe on this trend at the moment. And, everyone from, Shaquille O'Neal investing in Google's Series A at $100 million valuation, almost 2 decades ago now. It's probably like one of the first examples of athletes, successfully investing in sort of world-changing technology companies. But yeah, it's something that's been growing in the US and is now also growing in Europe. And it's been fascinating to see it sort of explode into the mainstream over the past couple of years.
Yeah. So the question that I'm asking myself is, like, I think there are around like 300,000 angel investors in the US or something. And like, if we are talking about athlete investors, are we just talking about like 10, 20 of the most well-known ones, like Shaquille O'Neal, that are all around the media? Or is there something, as I would call it, like a long tail? Because I assume in the US there's a lot of sports, a lot of professional athletes. So what number are we talking about?
So we've mapped out at least the publicly available information on athletes who are investing and those that have talked about it publicly. And just within the US, there are several hundred who have publicly been investing in startups. If you take away the public information, I believe that the long tail in terms of athletes who've actually been investing, whether it's directly, whether it's through a VC fund, whether it's through a syndicate, I'm sure it numbers in the thousands just within the US, across the main major leagues. And then in Europe, it's I'd say it's much more nascent. There are a few, it's still we're right at the start of that trend here. So I'd say it's probably a couple of hundred athletes who have been sort of successfully doing this in Europe now for a couple of years, but it's growing very quickly. And all the data we have from the interest in our pre-launch community of athletes, which is growing strongly, every month, is that those original big name athlete investors that you see in the press have had a big impact on the motivations and appetite of other athletes to start investing in startups.
Yeah. So in the past 2 years, you talked to many of these athletes out there. Was there anything that really surprised you in these discussions? Something unusual, uncommon, or around their questions? So just walk us through these kind of discussions with them.
Yeah, look, I think right. Well, firstly, I'd say there is definitely a difference between the US and Europe in terms of athlete education and knowledge about investing in business. And actually that really comes down to, if you drill down into it, comes down to most athletes in the US have gone to college, as part of the draft system. It's actually, I think it's a great system. So most of them have gone to college, and the ones that do go to college, a lot of them do business degrees, right? So they have a fundamental understanding of business. And as you may know, the US is, it's a very entrepreneurial culture already. There's already like a growing interest in, I'd say there's more interest in going down that entrepreneurial route in the US than there is already in Europe. So generally, they have a better understanding of angel investing and business and entrepreneurship in the US. Whereas in Europe, most, I guess the biggest sport here is obviously football, soccer. And most football players leave school at the age of 16, right? So they have less formal education on business, and there are a few exceptions to that rule, including Matt Smith, who's working with us as an advisor. He actually is one of the few professional footballers in Europe who went to university and got a degree. He's now doing an MBA. But the vast majority of athletes left school early, and so there is certainly a gap in terms of education and understanding of how business works and how angel investing works, which we're obviously looking to fill and address with Sequel. The other things that surprised me, yesterday, for example, I was speaking with an NFL player, and it's quite astonishing. This guy has not publicly got any profile in terms of his angel investing, but he's done more than a dozen angel investments himself directly, not through a syndicate, not through a fund. And he's been advising startups as well, particularly those in the sports tech world. And I was frankly extraordinarily surprised about his level of understanding of the startup world, and also how he has been proactively helping the portfolio companies that he's invested in, right? As you probably know, all founders send out their investor updates every month, or slightly less frequently. And they they're normally asking for help with stuff, and as you know, as an entrepreneur, you probably get a small percentage of your angels responding to those and actually helping you on the journey. And what I think has surprised me in my conversations and understanding of the athletes, at least in our pre-launch community, is that they're very proactive in trying to help the companies in their portfolio. Which I think is, that is a reflection of their appetite to learn, right? They want to learn how these companies work, and a good way of learning is getting close to the founders, trying to help with various things, whether it's promoting a product launch or giving some advice on leadership training or whatever it may be. That is those are great ways for athletes to learn. And professional athletes are obviously very high performance people, and you'll find that a very high percentage of them have a growth mindset. They're constantly trying to develop themselves. They're constantly trying to learn something new, become better, and that's been sort of drilled into them through all of their their training, professional training, as part of their teams or as a solo athlete. So that's been really refreshing to see. It's not just people investing for a financial return. These aren't passive investors who are just putting some money in and you won't hear from them throughout the rest of your startup journey. They're really keen to learn and help these startups grow and make an impact.
So you were just talking about the character traits of professional athletes and how that can really, really help also in the investing world. Are there also some kind of character traits that make it hard for them to become good investors?
No, look, I think I wouldn't say character traits. I would say a lot of their experience from investing in other asset classes and the advice they may have received from people around them is not necessarily geared towards startup investing, right? It's typically investing in what are traditionally considered very safe asset classes, where there's a lot of liquidity. You can buy and sell at any particular point in time, whether that be, real estate or the traditional stock market. So there is certainly a mindset shift that you need to make when you want to start startup investing. And by the way, we're obviously not, firstly, we're not a financial advisor, but we don't advise athletes to, stop investing in real estate or in the stock market. But we do think, just as any financial advisor will tell you, having a small part of your portfolio in higher risk, longer duration asset classes like venture capital is an important part of the portfolio strategy. And so, adjusting their mindset to that is one core part of what we're trying to do with our platform and educating them. Just to drill a bit deeper on why are athletes interested in venture capital and startups as opposed to public markets of real estate, right? Like what's the rationale behind that? Well, firstly, financially, if you are investing well in venture capital, it far outperforms those other asset classes, right, on pretty much any time frame. And if you look historically at the data, we did an analysis where, we looked at, okay, if a Premier League player were to invest, the average Premier League player were to invest 10% of their salary over 5 years in various different asset classes, what would they have 10 years after that? It's basically ends up based on, if you assume about £1.5 million of invested capital. The stock market, you have about just under 5 million after 10 years. Real estate, you have 3.8 million. So these are good returns, right, on a £1.5 million investment. The average venture fund would be 6.8 million, so better than real estate and stock market. And if you're investing in a top performing venture fund or top performing startups, top decile, you'd have £45 million at the end of a 10-year period, right? So there is a significant opportunity for financial returns. Obviously, there are a lot of caveats to that in terms of building a diversified portfolio, ensuring that you're diversifying over time as well, due to the swings in valuations and pace of growth of private markets during different parts of the cycle. But financially, there is massive opportunity there to create great returns. But beyond that, why startups? Well, if you invest in real estate, that really is it's not a pretty productive asset, right? It's a safe place to store your money. It's not creating jobs. It's not creating innovation. It's not going to change the world for sure. Invest in the stock market. Certainly, hopefully those are productive assets, right? Those companies are employing people, and they're deploying capital and allocating capital to hopefully develop things and doing some research and development. But startups is the area, but you don't really have, if you invest in the stock market, you're not having really, unless you're investing big sums, direct exposure to the management team. You're not going to have an impact on those companies, right? Aside from the capital that you invest. Startups is the unique asset class where not only are there good opportunities for long-term returns, but you have the ability to interact with the management team, to have a real impact on a company at the start of its journey. And that, I think, is quite unique. So that's why I think we're seeing a real growing interest of athletes investing in this asset class rather than some of those more traditional asset classes, is they have a chance to learn, they have a chance to have an impact, and they know that this is not, this is an asset which is actually going to be productive. It's going to create hopefully some value for society, which isn't necessarily the case if you're, just buying another house.
Yeah, that's 100% true. So if I think about investing into startups and venture capital as an asset class, there's like this big spectrum that also most of successful entrepreneurs that start investing into this asset class see. So you can do anything from investing into syndicates, direct investments as a business angel. You can do LP investments into funds, or you can even raise your own fund at some point. So let's imagine I'm a professional athlete. I'm trying to start out now my investing career. So what would be my first steps, my go-to path? What would it look like?
Yeah, good question. I think it mirrors a lot what traditional angel investors would do, right? If you were just starting off angel investing, how would you do it? Well, you typically want to learn from the best investors, right? So you want them to help you understand how startup investing works, all the different trends, all the important, I guess, specific language that is critical to understanding the market. And ideally, you want to invest alongside the best investors, right? If I was, venture capital is one asset class where past performance of venture capital managers, of asset managers, is a good indicator of future performance, right? It's not necessarily the case in some other with some other asset managers and private equity, for example. It's not necessarily the case. So I would, as an athlete or as an angel investor, I'd be looking to how can I learn from and invest alongside the best investors in the world. And when you talk to a lot of the, I guess, more experienced athlete angel investors, I can, there are a few that I can name, but Rio Ferdinand is a good example of a footballer who, he started, he bumped into a partner from one of the top VC firms in Europe at an event a few years ago. And he ended up going into their office every week, hearing startups pitch to that VC firm, and who I won't name, but and learning from that VC firm on a weekly basis, and the ability to invest alongside them. Right now, that's the kind of experience that we're looking to scale through a platform. How can athletes learn from the best investors and have access to invest alongside them? And so that's what Sequel provides. You can obviously invest through syndicates. There isn't really an education component to that. There isn't a community really element to most syndicates out there. And you can obviously invest in a VC fund where you won't really have access directly to the founders that fund is investing in. You're unlikely to have the opportunity to engage as much directly with them and to learn and to add value to those businesses. So we're trying to enable athletes to both learn from and invest alongside the best investors in the world, whilst directly exposing them to the underlying portfolio companies and founders, giving them the ability to learn and giving them the ability to hopefully turbocharge and accelerate the progress of those companies.
Yeah. And like you already mentioned a few athletes that are doing quite well along this interview, but give us some more examples. So who's doing a great job of doing all of this?
Well, look, I guess I could talk about the ones that are publicly talking about it. Some of the most successful athlete investors are quite quiet about this stuff, right? And they don't like publicly talking about it. I guess one of the most prominent ones in Europe is obviously Mario Götze, who's had who's been very public about his angel investing. He seems to have done very well. He's invested alongside a lot of top funds, which is a good indicator that he has a high quality portfolio. In the US, there is obviously a lot more, of a track record of people driving actual returns, right? As you and I know, as an angel investor or even as a VC, you don't really know if you're good at it for at least a decade. So you can get lucky with some early wins, but really it takes 10 years or so to really understand is this person a good investor? Most notable example is probably Shaquille O'Neal in the US, but there are tons of other examples from basketball, from the NFL, from the MLB, Alex Rodriguez. You've got tennis now increasingly. A few of the golf players. Serena Williams has got her own venture fund, right? She's very far along on that journey. But yeah, look, I guess the biggest names in sport and those who you see as most successful, if you actually look at how they've generated their wealth, most of their wealth has been generated off the pitch, off the court of play. It's been generated through endorsements and been generated through smart investing. In fact, I was reading yesterday that Roger Federer is I think the world's first tennis billionaire, right? And nearly all of his wealth came from smart investments and endorsements off the court. So yeah, I think this is something that a lot of other athletes are seeing, whether they're at the start of their careers, they're still a college athlete in the US, and they now have, an opportunity to earn money through the various nil deals that are happening there. they're seeing that the most successful athletes are actually making a lot of their money off court, off the pitch, and they should absolutely be focused on that as well. You know, they have a very short career. They have to capitalize on those opportunities while they have people's attention, and while they have, you know, a brand that they can use to get them access to invest in great companies, and also obviously do endorsement deals. And I think that's, you know, that's something which we're seeing a lot of growth of interest from. It's not just the goats that are doing this. It's the long tail of athletes now as well, who are, and the ones who are just, and probably the next, you know, the goats of 10 years time, who are probably who are thinking about this now and starting to invest time in making it happen.
Yeah. So help us to understand a little bit better how Sequel works. So why like, how does it work to bring together like athletes on the one hand, startups on the other hand, and then you're also mixing VCs in between? So give us a breakdown on why VCs are interested in doing this and how you are thinking about it.
Sure, yeah. So I'll give you a breakdown. So firstly, on the athlete side, we're solving 3 problems for them. Number one is education, right? So we have an app where we feature short form educational relevant content for athletes on startups and investing. It's easy to digest, it's accurate, and you know, its only goal is to help athletes you know, learn. The second part is access. So we partner with top performing venture funds who have a track record of delivering top returns to investors, and every deal that is featured on the Sequel platform, you know, we have a deal that drops, is being led by one of those top quality venture funds. So athletes have the access to invest alongside the best investors in the world. And then finally, we enable them to diversify. You know, diversification is critical in venture investing if you're to generate good returns in the long term. And we enable them to write much smaller minimum tickets into those companies. And so those 3 things together, all in an app, right? A really high quality consumer grade app that our team have been building now for more than 6 months. We're able to give athletes the confidence to start investing and making these investments. On the other side, you know, how do we partner with VCs and founders? And why would VCs partner with us? Well, as I mentioned at the start, we are bringing not only capital to these companies, but also attention. We're bringing athletes who can, just having athletes on your cap table will drive a huge amount of press attention during the fundraising announcement. And beyond that, we're looking to help the portfolio companies drive you know, interest in product launches, bespoke media opportunities on an ongoing basis with their athlete investors. And post-investment, the founders get connected with the athletes, their athlete advisory board, who their investors are through us. And they're able to directly interact with them through the platform, ask for help with various things. And you'd be surprised at the different things that athletes can help with. It's not just getting press. In fact, probably the most notable way that athletes can help is through their network. They have amazing networks. Obviously, everyone loves sport and loves athletes. And so you'd be surprised at the sort of, you know, from FTSE 100 CEOs through to, you know, pop stars, musicians, they know everyone. And they have an ability to really drive value to those startups through their network. And then finally, most athletes have been part of, you know, elite world-class teams, right, and cultures. They understand what it takes to build an elite culture, and they can give startups and founders a lot of advice on how to build their cultures, on leadership training, and even be part of team building events with their founders and portfolio companies. So we really look, when we say value add investor, we mean it, and we invest a lot of time both internally. We've got 5 exited entrepreneurs in the team who have all successfully built and sold companies, and have also done a lot of investing. So not only our team invests a lot of time in helping add value to those companies, but athletes obviously can add value in a number of ways, which we're sort of helping facilitate through the platform. And why would VCs partner with us? Well, we're accelerating the performance of their portfolio companies. We're helping them drive better returns. We give them access to our events as well. So we run an event series with athletes, VCs, angels, entrepreneurs, which VCs get access to. We help diversify the sort of the cap table of their portfolio companies, which is something which is a big, well, certainly a thought process among the most successful VCs right now, is how can they create diversity in the cap tables of their portfolio companies. And eventually, our second asset class that we will launch is funds. So we will feature funds on the platform eventually, so that some of our athletes can do some more, I guess, passive investing in this asset class beyond the active stuff they do directly. And so we will connect them with athlete LPs as well eventually. Yeah. But really, it's about, and then finally, most importantly, probably actually, for the best deals out there is huge competition from VCs, right? And particularly right now, in I guess a cooling market, there is even more competition for the best deals. And so a founder receives 3 or 4 term sheets from top VCs, and one of those VCs is partnered with us and can say, we can bring, Sequel and some high-profile athletes to your cap table. I think they have a big competitive advantage in winning that deal, and getting their term sheet accepted. So that's probably the most important one.
Cool. Thanks for this breakdown. And as most of our listeners and readers are investors themselves, so a lot of VCs, emerging fund managers, and angels, the question remains, how can they get involved if they are not a top performing VC fund yet, or just start to build out their own funds? So how can they get involved with athletes out there?
Good question. So, I mean, firstly, I'm sure there are some top performing VCs listening to this, so happy to discuss direct partnerships with you. But even if you're an emerging fund manager, we are looking at ways to create a scorecard for emerging fund managers, so we can partner with them directly as well in the future. But even if, even before that, if they are investing, if they have existing portfolio companies who are raising new rounds, and they have, top tier VCs with long track records coming in and leading those rounds, we would obviously love to hear about those deals and look at those deals. Typically, we invest from large seed onwards, so $3 million plus seed rounds to Series A, Series B, Series C. Our ticket size at the moment will vary between $500,000 through to around $5 million. And in the following categories, so climate tech, education, health and wellness, and sports tech, underrepresented founders, financial inclusion, anything which fits those categories, large seed beyond. We'd obviously love to look at it. You can find that on our founders. You can find our criteria as well as our investment engine on our founders page on the Sequel website. Or you can reach out directly to me, alex@joinsequel.co, and I'd be happy to have a chat.
Nice. And I will put also all the links in the show notes below. And I want to finish off all of this with one final question for you, Alex. So what is one thing that you wished you knew when you started out investing?
I wish I knew to diversify.
Okay.
I was very lucky in that the first, and this is the mistake most angel investors make. They go, I'm going to start angel investing. And they go, okay, what am I going to invest this year? Maybe £50,000 in startups. And they invest it all in one startup. And they invest it in 2 startups, right? And, you have to be very good at picking and probably very lucky in order for that strategy to pay off in the long run. It would have been much better for me at the start to say, actually, I'm going to split this £50,000 up into 10 £5,000 checks. And over 5 years, I'll build a diversified portfolio of 50 startups by doing 10 checks a year. So that is one thing I wish I knew. And yeah, look, I was lucky. Again, I'm not going to say that I picked well, but I'm going to say I was lucky in some of the couple of first investments I made did very well. But yeah, diversification is critical if you want to drive good returns in the long term.
Cool. Thank you so much for spending the day with us, and have a great rest of the week. Talk to you soon, Alex. Bye-bye.
No worries.